Welcome to our presentation of the third quarter 2024 results, marking another strong period for One United Properties. Thank you for joining us today. As we all know, 2024 has been a turbulent year, and we'd like to use this time to review our performance over the first 9 months and address some key questions we've encountered recently. We recognize that our decision to increase share capital at nominal value raised questions among investors. This approach, however, was chosen to secure the equity essential for our long-term ambitions. Issuing shares at nominal value ensured the full amount required for the company was obtained. We acknowledge that this decision was not fully understood by the market, which contributed to an unexpected decline in our share price, compounded by administrative hesitation on real estate development and increased public scrutiny of the sector.
Indeed, 2024 has presented a challenging environment for real estate. At our April Capital Markets Day, we introduced the One 2030 strategy, a comprehensive plan to guide us through the next 6 years. This strategy was met with strong support from shareholders and a favorable market reaction. Our vision includes completing 11,000 residential units by 2030, supported by a land bank for an additional 20,000, most of which will be under development or planning by then. We are also targeting the development of 275,000 square meters of commercial assets and expanding our hotel portfolio with 3 properties to be operational by 2030 and 3 more under construction. This strategy underscores our commitment to doubling our business by 2030 and quadrupling it by 2035. To accelerate this growth, securing capital was essential. The strong investor interest in our vision, demonstrated immediately after our Capital Markets Day, created a timely opportunity. In late April, together with our chairman, Claudio Cisulo, and board member, Marius Diaconu, we sold a share package to investors, including both local and international investors. We committed to reinvest those proceeds into the company's next capital increase, and we delivered on this commitment. Of the 68.5 million euros raised in the share capital increase, we personally contributed 42.6 million euros.
We understand that issuing shares at nominal value was unconventional, and while some market reaction was expected, the broader context amplified its effect. Our goal was straightforward: to attract long-term investors who share our vision. Issuing shares at nominal value offered existing shareholders an opportunity to increase their stake by contributing approximately 10% of their existing holdings. Additionally, we provided shareholders unable to contribute fresh capital an option to sell their rights in the market. With the operation now complete, we successfully raised over 68 million euros, part of a total of over 173 million euros raised from the Bucharest Stock Exchange between 2021 and 2024. This recent increase saw over 97% of rights subscribed, a testament to market confidence in our strategy, and attracted over 2,000 new shareholders, strengthening trust in our growth plans. To prevent further dilution and market pressure, we opted not to proceed with a private placement, cancelling the remaining 3% of the offering.
The funds raised in September are directly powering our development pipeline and strengthening our financial position. You will see the impact of this capital on our balance sheet as of September 2024. Since the beginning of the year, our equity has increased 7% and our cash position has grown by 47%. Taking a step back and looking at our evolution over medium term, our assets have expanded significantly over the past 4 years, from 350 million euros at the end of 2020 to 1.1 billion euros at the end of September 2024. Equity has risen from 169 million euros in 2020 to 640 million euros as of September 2024. Our real estate assets have grown from 260 million euros in 2020 to 775 million at the end of September 2024. And we've kept our loan-to-value ratio stable at 30% since 2020, proving our capacity to pursue projects with minimal leverage. Looking ahead, if we identify new market opportunities, our preference is to fund them through reinvested proceeds from sale of commercial portfolio, refinancing of standing assets, or, if favorable, issuing corporate bonds. Earlier this year, the General Meeting of Shareholders approved a €300 million bond issuance available until April 2027. With low leverage and robust financial health, we retain flexibility to pursue this route if necessary.
At One United Properties, our management decisions are always guided by a long-term perspective, and we believe the recent capital increase will yield substantial benefits over time. The Romanian real estate market, particularly in Bucharest, holds tremendous potential, and we are dedicated to exploring these opportunities to deliver shareholder value.
We cannot ignore the fact that recent events in Romania's real estate sector, particularly the insolvency of a known developer, have intensified public scrutiny, obviously temporarily affecting our share price. In response, we reaffirm our commitment to transparent and fair regulation, fostering a secure environment for both clients and shareholders. Discussions on potential down payment limits could reshape the market, raising costs and potentially limiting access to real estate. We advocate for alternatives, like a provisional land registry for properties under construction, which would prevent multiple sales of the same unit, and policies ensuring that advance payments are strictly allocated to project financing. Such measures would build trust, benefiting both buyers and shareholders. We also support prioritizing preferred creditors in insolvency scenarios in order to protect buyers' investment. These steps will enhance market stability, aligning with the interests of our shareholders and the wider community.
Before I hand over to our CFO for the financial overview, I want to address media coverage. We support quality journalism, but we draw the line at articles misrepresenting facts for extortion. We encourage reliance on credible sources, and if in doubt, please cross-check with our official communications. As a public company, we prioritize transparency. This year alone, we've published over 100 current reports. Our financial results and stock market updates are available on the Bucharest Stock Exchange website, and press releases are at www.one.ro. For specific inquiries, please reach out to our investor relations team at investors@one.ro. Now, I'll hand over to our CFO, Cosmin Samoilă, for a detailed review of our third quarter 2024 financial performance.
Welcome, and thank you for joining us today for the presentation of our financial results for the first 9 months of 2024. Over the next few minutes, I'll present the highlights of our financial performance, focusing on the key figures shaping our business this year. To begin, in the first 9 months of 2024, One United Properties achieved a consolidated turnover of €208.5 million. This marks the second time in our history that we have surpassed €200 million turnover threshold within the first 3 quarters. The previous time was last year. This underscores the robust position One United Property holds in the Romanian real estate market. Our residential segment remains the main contributor to our business. By the end of September, revenues from residential property sales reached €164.2 million, reflecting a 7% decrease year over year. However, the profit of the residential segment had a strong growth, net income from residential properties increasing 12% to €56.9 million. This positive trend is largely due to the revenue recognition from development started in 2022 and 2023. We also achieved a notable improvement in our net margin from residential sales, rising from 28.7% in the first 9 months of 2023 to 34.6% this year. This increase is driven by ongoing progress in our developments, which generate greater value as we advance through each phase and construction is getting closer to finalization. Moving to our rental segment, we recorded solid growth in the first 9 months of 2024. Rental income, including tenant services, increased with 14%, totaling €22.8 million, with net rental income up with 18%. This growth reflects the strength of our commercial portfolio, especially as new tenants continue moving into One Cotroceni Park office buildings. In terms of gains from investment property fair value adjustments, the group recorded €20.3 million, a decrease of 42% from the previous year, due to last year having more commercial assets reaching advanced completion and rental stages, while this year One Technology District, the future campus for Infineon Technologies, Mondrian Hotel, and One Gallery Floreasca are in the first phases of development and do not generate yet rental income. On the expense side, administrative costs remain stable at 11 million euros, underscoring our careful cost management even as we scale operations. The result from operating activity was 78.6 million euros, decreasing 10% year-over-year. This was primarily due to the reduced gains from fair value adjustments, as pointed out earlier. If we normalize this result by excluding in both years the gains from fair value adjustments, our operating activity result actually increased with 12%, both our residential and commercial segment marking double-digit increase in profitability, 12% increase in net income from residential properties, and 18% rise in net rental income from commercial properties. We ended the first 9 months of 2024 with a gross result of 70.8 million euros, reflecting a 15% year-over-year decrease, while net profit was of 60 million euros, a moderate 13% decrease, demonstrating the resilience and scale of our business, even amid challenging market conditions. Turning to our balance sheet, by the end of September 2024, total assets grew with 13% to reach 1.13 billion euros. Non-current assets rose 8%, driven by growth in investment properties, which totaled 590.9 million euros as of the end of Q3 2024. Current assets increased with 18%, reaching 510.5 million euros, mainly due to the cash positions that increased significantly, up 47% from 84.6 million euros to 124.1 million euros by the end of third quarter, increase generated by our share capital increase. Thanks to robust sales, One United Properties achieved cash inflows from sale and pre-sale of residential units of 121 million euros in the first 9 months of 2024. Additionally, contractual cash flows from pre-sales agreements as of September 2024 amount to 353 million euros to be received until the end of 2026. These agreements cover only units pre-sold as of the end of third quarter. At 30 September, we closed the period with a strong balance sheet. Our gross loan-to-value ratio held steady at 30%, reflecting our solid financial structure. Net debt improved and decreased to 111.4 million euros, representing only 10% of total assets. In summary, One United Properties remains focused on building value and maintaining financial stability, even in a challenging market. Thank you for your attention, and for more detailed information, please refer to the full report available on our website.
In closing, thank you for your continued trust and support. We are in a transformative phase, and while there are challenges, our direction is clear. This quarter, we began construction on One Technology District and the Mondrian Hotel, with permits granted in August. As of the end of September, we had 4,041 residential units and 43,000 square meters of commercial spaces under construction, representing a gross development value of over 1.5 billion euros. We remain focused on executing our vision and building a company that delivers value over the long term. Thank you for being part of this journey with us.